The shift in precious metals market narratives was on full display in Western media this week. A few of those examples in a second, but first, a moment of bullish celebration. It's in order. I know silver bulls out there know their nominal price close on the week. If you have young children in your household, you probably know the two key numbers as well. Every bull market's walls of worry climbs are similar in that bullish narratives change and often become common knowledge in the markets, better understanding for why climbing price points and relative valuations make sense. This precious metals market is no different. For the first example this week, let's turn to Now Silver triple-digit headline article publishing CNBC as they spoke with longtime COMEX derivative trader Philip Strebel in the middle of this week.
We spend a lot of time talking here about the tech stocks and the AI trade, but the big winners this year, metals are soaring. Silver and gold are on pace for their best year since 1979. Copper is on pace for its best year since 2009. So let's drill down on these trades, starting with copper, and see what 2026 might hold. Phil Strebel is the chief market strategist at Blue Line. Phil, I need to eat a little crow here. I can't remember who I was discussing this with at the beginning of the year, and I said, even if the commodities perform well, the stocks often don't. They can be very cyclical. They go up and then they go down, and they're not necessarily always the best stewards of capital. Well, what a year it's been. Does it continue?
It really looks like it is. I mean, the underlying drivers for these different commodities to keep going up are there, and they're set in stone. You look at copper and silver, their prices are rising due to tighter supplies from mining disruptions, surging demand from the green energy transition, and the building of and running of those AI data centers. So it's the surging demand, the global shift towards electrification, and that includes the growth of EV vehicles, renewable energy products, wind and solar. It's really driving that record consumption and demand for copper, silver, and green energy.
I want to switch gears to silver now because it's a little weird, but it was pointed out by Andy Brenner, so I'm just stealing his data, by the way, that silver per ounce now costs more than a barrel of oil. It obviously happened back in 2020 when oil went negative, but to the broader idea, it normally does not happen. We're showing a chart right now, Phil, you can see it. What do you make of silver's run, and do you see any slowdown to silver because it has outperformed most of the stock market this year?
Yeah, Brian, you couldn't have two different products going in complete polar opposites. And the spread differential is really driven by the changing dynamics and the growing fundamental uses of silver versus crude oil. You've got that physical scarcity. You know, the market is experiencing growing like a global scramble to get physical silver. You've got 5 consecutive years of supply deficits leading to those tighter inventories across major exchanges like London and Shanghai. You also have individual investors that becoming more savvy in a sense. They're realizing that allocating small slices of their portfolios towards these growing themes with the commodities behind it have really helped structurally support prices. But back to the oil, the fundamentals are the opposite. You've got production surges. You've got oversupply, not only from OPEC plus, but from shale at record highs, the growing supply glut. I mean, the amount of oil that's just floating around in storage right now is unbelievable. So look at the chart pattern on oil year to date, look at the chart pattern of silver year to date. And it's like looking in a mirror with the opposites.
It seems like, and again, with oil, it could turn on a dime. I know some people might question all the data around floating storage, et cetera, et cetera. But from a chart perspective, Phil, do you think it's possible, or I should say probable, because anything is technically possible, that oil will fall into the $40 range and fairly soon?
I think it's already written in stone. I mean, you look at the administration's mandates, they're really trying to bring inflation down. The easiest way to do it is by lowering energy costs. We're just becoming more and more efficient using electrification for things. I mean, people don't even buy gas or oil and anything in your yard. Your lawnmower isn't even run on gas anymore. And you look at electric vehicles, they don't even use oil at all. So it's the demand for oil is just not there anymore. And that's where you look at these AI centers, these data centers, they're using things like copper to turn a turbine through electrification in order to create that energy. So it's just been a complete shift and a changing dynamic of where things are at. And it's possible we even see triple digit silver at some point in the future.
Wow.
The Burr Lives trade, gold and silver, or silver and...
Just in time.
I inverted it. Phil Strebel, appreciate it. Thank you.
Probably the most important point Phil made in that clip was regarding 1 ounce of silver bullion now buying more than a barrel of crude oil in nominal price terms. Market onlookers, including myself, have to go back in time to figure out just how unprecedented this is, not merely within our lifetimes, but for many, many lifetimes. Yesterday morning, I went on the Face Analytics Market Morning podcast to speak with longtime trader Dale Pinkert, and this silver versus oil trade topic was one of the items we discussed. I'll leave a full link to our 28-minute discussion in the show notes below, and I'll be back correcting my mistake when speaking to him. Now that I've been gifted the historical data, it's probably going to blow you away, as it did myself when I saw it last evening. I'll be right back with that. But first, have a listen.
Well, you're like a mind reader. This oil silver ratio, is that what we're looking at?
Yeah, it's pretty amazing. It's blown a lot of people away because they have, again, remember the discussion we've had before about recency bias?
Yeah.
And everyone in their lifetime or last half of their lifetime has this recency bias. And they don't look back far enough and think about, well, what was the first half of my life like? Well, here's where oil was in like a range for a long time for most older people's lives. And then popped out and it went to this range. And now we're coming down to the bottom, lower half of the range. And are we going to get to 40 a barrel? Who knows? But it's really crazy to see silver, a price of an ounce of silver over oil. That's not really happened much because of a few reasons. This little, I'm gonna zoom in on this just so people can see a little bit better. But this is a little bit more data. This goes back to 1870. Okay, this is like back in the Rockefeller, Standard Oil era. And you got to remember, silver was demonetized at the time, so it doesn't really do us any help to use silver in this data. But you can see how high the spikes got. And then 1893, there was a huge glut of oil that happened because of drilling in California and Texas, and there was also a crisis financially in the markets. So this thing went up to near 100. And right now, last I looked a couple days ago, 76.5. The one thing to remember about gold, revaluing sharply against oil is that it's possible that we are going back to a world where gold is the basis for the settlement trade and not the petrodollar. And if that is indeed the case, you can pretty much toss this stuff out. I mean, you're going to have oil and gold over 100, that ratio for a long time. And that's just, I think we have a lot more oil than we have precious metals. And I think you kind of have to get that through your mind, is that in order to get silver, an ounce of silver out of the ground, the amount of work required is a lot harder than getting 1 barrel of oil out of the ground. My precious metals and financial data wrangling friend down under, Nick Lard of goldchartsrs.com, probably saw that clip and pulled the long-term silver versus oil barrel data. And I have to be humble, I totally underestimated silver in the late 19th century. The bottom half of this chart shows that for a time in 1893, 1 ounce of silver peaked in buying up to 4.5 barrels of oil at one time. Almost all of the investing world doesn't have this historical data, and the idea that this ratio has ever gone that high, nearly 4 times the peak of now and or even the January 1980 silver bull market peak, well, what I'm telling you is that this ratio could go a lot higher to come from where it is today. Stick around. On the other side of this break, we'll look at still stubbornly high and climbing London lease rates for not only silver, but we're also going to have a listen in on bullish narrative changes for platinum prices to come. We'll be right back. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Traditionally, you got your dealer, your custodian, your depository.
The reason why ours is so good, first of all, we're 2 of those 3 parties, right? We have the depository, we're the retailer. The only thing we're not is the custodian. We don't get any negative experience from the customer because of how fast things are going. Who you pick is incredibly important. SD Bullion, we're different.
The spot silver price closed the week up near 67 an ounce bid, having nominally broke above that nominal number again in today's trading. That's another nominal record price high close for silver. The spot gold price ended this week at $4,337 an ounce bid, technically looking like it could break out to new nominal price highs as soon as next week's Christmas shortened trading week. The spot gold silver ratio ends this week down at 64 ounces of spot silver to afford 1 troy ounce of spot gold. In a precious metals world, which appears to be breaking out of its Western world decades-running over-leveraged derivative price suppression schemes, fantastic supply-demand factors and structural supply deficits aside for silver and platinum ongoing, it's important to remember that the likely final driver of this precious metals bull market into mania phase will probably be the coming capital flows into sectors knowing that the world is not going to be able to pay or keep its overpromises in real terms. The still historically overvalued AI tech concentrated S&P 500 stock market index continues breaking down in silver troy ounce terms and gold troy ounce terms. This is kind of how I envision the years to come, as silver and other precious metals outperform on a relative basis to stocks, bonds, real estate, etc. I know nominally prices look high, but in real value terms, we have a long way to go in the bullion over other asset class trade to come. Bloomberg terminals continue highlighting the stubbornly high lease rates for silver in London, publishing this chart this week illustrating while lease rates on gold have recently dipped, the opposite is true for the tight 1,000-ounce silver market in London. The information is corroborated by other sources on the other side of the world tweeting to their followers, in this example in Japan. Bruce Ikemizu tweeted still high lease rates not merely for silver, but also palladium and specifically platinum in London. Platinum has also been threatening the nominal 2,000-ounce spot price mark of late. It's already broken out to new nominal price highs in over 113 fiat currencies around the world this past week. And platinum's all-time nominal price high of around 2,300 an ounce was hit in early 2008 in then much stronger fiat US dollar terms. For some new platinum bull market narratives to consider, the former head of Goldman Sachs' commodity desk, the silver shorts are the ETF's fame, Jeff Curry, went on CNBC this week to pound the table on platinum bullishness headed into 2026. Have a listen.
Silver retreating after hitting an all-time high yesterday. Gold is just below record levels. And the clear breakout today, it's platinum, which my next guest is arguably the strongest commodity in the precious metals complex. Joining us now is Jeff Curry, the Chief Strategy Officer of Energy Pathways at Carlyle Group. Jeff, it's so great to see you. Welcome.
Hey, Kelly, great to see you as well.
You know, I still thought you had the best encapsulation of what was going on in COVID when you said there were too many dollars chasing too few atoms in the world, and so the price of everything was going higher. Is there a macro theory that explains why all of the metals prices are absolutely levitating?
If it's in the periodic table and it has an atomic number attached to it, it's the debasement trade. If it's a molecule and it has a carbon in it, like oil, gas, corn, wheat, it's struggling. But I think let's focus on the ones with the atomic number attached to them. And your point here is you've had a great run in gold, you've had a great run in silver, because they're pricing that debasement trade. When we look at platinum, and the reason why I'm going to argue that's the one you want to own today is the news coming out of the EU this week, which took away the ban on ICE, internal combustion engines, because the platinum group metals go in as the autocat. So you have taken away the negative, positioning on platinum and opened it up to the upside. And that gold platinum ratio suggests there's a lot of upside here.
Right, because I understand when people say it's all, gold is a central bank purchase story, that's fine. But it feels much more like what you said, that this is a dollar debasement trade. Obviously, the dollar is going lower. But when we say dollar debasement, are we making too much of it? Is it a dollar weakening? Is it dollar debasement? Does it matter if there's a big kind of differentiation there?
Well, I think there's 2 points here. The debasement trade is I want to own something other than fiat currency. The de-dollarization trade is I don't want to own dollars and subject myself to U.S. sanctions. And that would be like China and Russia trying to get away from seizure of central bank assets. So there's 2 different dynamics at play. Gold is being squeezed essentially by EM central banks trying to put both of those positions on at the same time. But people in the developed markets, they want to own gold, silver, in the precious space, primarily for the debasement reason.
Right, and I noticed that Bitcoin is not participating lately. Again, it's fine. It's done obviously quite well in prior years, but this would seem to be the time that it would be taking its center stage role as the debasement, asset of choice.
But I think you still have the on-ramp and off-ramp of the cryptocurrencies. Obviously, if you're a central bank sitting anywhere in Asia, you can move gold and nobody knows you have it. You can move it anywhere in the world. Gold can survive anything. It could survive a nuclear winter. Bitcoin, it's still in its infancy. It's a 16-year-old market. You put that against a gold, which is a 3 millennia market. We know gold can survive anything. And when we look at why has gold outperformed all the other, precious metals, let's go to platinum. Remember, platinum records, platinum everything sits above gold because historically it's more rare, it's more dense. But the reason why there's such a demand for gold, it's a $30 trillion market. It's absolutely enormous relative to something like Bitcoin, which is, $1.5 trillion. So, that long history there provides a level of security that both the central banks want as well as individual investors.
Individual investors like myself are still out here buying up platinum bullion, silver bullion, and gold bullion. If you're looking to add to your bullion positions, be sure to visit sdbullion.com and our deals page for low premium offerings this weekend. Merry Christmas and happy holidays, everyone. That will be all for this week's SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.